Like the lineup of a football team, the various categories of structured products take defensive or offensive positions. The Derivatives League of the German Derivatives Association distinguishes these products according to risk groups, starting with the defensive and safe uncapped capital protection certificates through to the offensive and speculative knockout products. Bonus certificates are the midfield creative department in an investor's securities account. They look ahead to profits, but also back to defense. Bonus certificates allow investors to invest in the underlying with reduced risk. Thanks to the bonus structure, attractive returns can be made on stable prices and even on prices that fall slightly. Bonus certificates still allow investors to benefit from increases in the value of the underlying. The most important features of a bonus certificate are the bonus amount and the barrier. The bonus amount indicates the current amount the investor receives at maturity if a predetermined lower barrier, called the floor, is not breached during the entire product lifetime. The lower the barrier, the more likely it is that the bonus amount will be collected at maturity. If the barrier is breached, the entitlement to the bonus amount is irrevocably lost, and the redemption amount at maturity corresponds to the value of the underlying asset. If the barrier is not breached, the unlimited participation in the performance of the underlying may result in a higher amount being paid than the bonus amount. Profits can also be made if the barrier is breached when the underlying recovers and increases in value. Bonus certificates with a large gap between the price of the underlying and the barrier strengthen a portfolio's defensive position, while those with a smaller gap are more offensively structured and can generate high returns. The most important points in brief: the market expectation is of a sideways moving or moderately increasing underlying. The underlying will not breach the barrier during the product lifetime. The advantages and opportunities are: profits can also be made in sideways moving markets. The earnings potential is not limited. The disadvantages and risks are: the investor risks losses if the underlying develops in an unfavorable direction. If the barrier is breached, the bonus amount is lost. The various factors involved in pricing: performance of the underlying, volatility, residual maturity, interest rates, dividend performance. The investor bears the issuer risk. You can find out more at derivateverband.de or directly from the relevant issuer.